Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, we're featuring two recent transactions within our real estate business: the sales of Livensa, a student accommodation platform in Southern Europe, and Aveo, one of the leading senior living platforms in Australia. To dive into these deals, we're joined by Ruban Kaneshamoorthy, co-head of Brookfield Real Estate in Australia, and Alberto Nin, managing director of real estate in Southern Europe. Ruban, Alberto, welcome to the podcast.
Thanks, Meredith. Great to be here.
Thank you.
Good to have you. Let's dive in really high level. Can you both tell me a little bit about your backgrounds and your role at Brookfield?
Sure, Meredith. I joined Brookfield 9 years ago to help grow our real estate investments with a focus in Southern Europe. Since then, we've been investing quite a bit in real estate over here. We've grown a big student business, which we will talk about. We have been investing in hospitality quite intensively as well, and have grown a big logistics portfolio.
Thanks. Ruban, what about you?
I've been with Brookfield for about 7 years, based in Sydney, Australia. I head up the real estate group here, so I really focused on the investing and the portfolio management side, similar to Alberto. Historically in Australia, we had a large office business, but more recently, we've really diversified into the alternatives. So retirement, which is the sale, we'll talk about the Aveo business, but student accommodation, logistics, also hospitality, really looking towards those alternative sectors going forward.
Speaking of alternatives, we're here to talk about a couple of deals, Livensa and Aveo, that really touch housing in particular. And housing can be a very broad sector. So do you mind giving us a little bit of a backdrop here about the current forces at play across housing, especially from your vantage point, maybe in the APAC region, and how those are influencing our thinking about real estate there?
It probably comes as no surprise to anyone that's listening to this podcast that global housing, the supply of housing, the cost and the affordability of those housing is one of the biggest issues that most countries around the world are facing. I think from a Brookfield perspective, we have a pretty unique vantage point because we have such a large living business across many facets, from multifamily to student accommodation, seniors living, and things including hospitality. So we get quite a broad range of what we touch on. I think more and more what we're seeing, though, is a large part of that restriction is really focused upon the inability to bring on adequate supply. And that's just a function of the cost. Increasingly, construction costs have gone up. Financing is hard to get by. Rents or prices that you need to sell assets for increasingly goes up and up. And at the same time, you're facing government restrictions around planning and delivery and restrictions around potential subsidies to help bring on that supply. That's definitely one theme we're seeing out. The other is really the shift towards more purpose-built accommodation. And as we see demographics around things like student living, things like senior living, things like the shift towards urbanization, all of that is going to become a lot more prevalent. Picking one of them, senior living, for example, since the period after World War II, we've now entered a stage where effectively over the next 2 decades, we're going to see the number of people turning 65 effectively double their historic averages. So they need places to stay. They're an increasingly affluent population. So the choices and shift that they make is very important, but it also means it frees up and creates additional housing, which can then be used by that broader population, adding to that supply, which will help bring it back into balance.
You bring up a really good point, which is demographic-driven needs, and they're very different based on ages, based on location, based on certain phases of life. Just to make sure we're covering this from a truly global perspective, Alberto, are you seeing that kind of influence as well, where you sit, that demographic-driven trend happening across different age groups?
Absolutely. I think in Europe, it's very similar to what Ruben was describing. There has been a lack of construction of residential, so supply has been very constrained, and at the same time, demand has only been increasing. What we have been seeing is those asset classes becoming more focused on specific target groups, and that's where the trends around senior living or around student housing really grow. There is a huge demand, and that demand is more and more looking for a professionally managed supply that really cater to those specific demand plots. So I think that's what we've been working on in trying to build up that kind of supply that really caters to those people.
Well, the interesting thing about demographics and thinking about their housing needs is we know how many people there are of various ages around the world because it's data that's shared. Maybe that's a little bit different than other markets or other periods of time that we happen to be in where things surprise us. So how do we think about approaching that data set and then evaluating more specifically why these are attractive investments for Brookfield? Can you bring us through that thinking a little bit?
I'll bring it to specific examples. So if we set ourselves 10 years ago at Brookfield in Europe, when we decided to come into the student housing, there was a few factors there that really made the asset class interesting. But the critical one really is that supply-demand imbalance, which we have been mentioning for a few times now. There was a clear, on the one hand, a static picture with a big supply-demand imbalance. Provision rates were below 10% across most of the UK and continental European geographies. But the supply was unprofessionalized, not purpose-built, not modern. It didn't cater to the students. It was unprofessional in the way it was managed. Portfolios were small, so there was no one really with a scale that would allow them to operate this in an efficient way and with significant know-how. So that was on the supply side. On the demand, it was definitely growing. You would see high quality universities across the UK, across continental Europe, attracting more and more international students. So you had a static picture with a big supply-demand imbalance. Supply was unprofessional, demand was only growing. And that's where we saw the opportunity and started investing in it, initially in the UK with Student Roost, which we then subsequently sold, and then with Germany, France, and Spain with our three platforms, International Campus, Oxco, and Livensa Living. Have been investing in the sector for now 10 years, and we continue to think it's a great opportunity.
You mentioned Student Roost, and this is something that tends to happen at Brookfield. We'll find something in one place, and we really start to build these platform businesses more broadly. Are there any things that we learned or things that stand out to you about that Student Roost experience that we were able to carry over to Livensa when the time was right?
As you say, this is one of the key competitive advantages that we have at Brookfield. First of all, if you build a modern spec, high quality building that was prepared for students, students would come. So once you build up supply, the demand will come to your asset. Secondly, we learned that if you build the right portfolio of assets, but also the associated operating platform and had enough scale, that would take you to maximize NOI, run the assets efficiently, be able to implement best practices, etc. So from an operational point of view, you would really maximize the performance of those assets. And third, and probably even more importantly, is if you put those two first factors together and build up an integrated owner-operator of PBSA, purpose-built student accommodation that had capacity to grow, it had the best operational practices, it would really attract institutional capital. Therefore, our business at the end of the day is creating these companies in order to sell them to more institutional capital longer term with lower cost. And that's what we managed to do in Roost. And that's what we felt very comfortable at the time to rebuild across these three other countries, and more specifically with Livensa in Iberia.
Thinking about that backdrop coming into Livensa, and this has not been a short journey per se, what happened? Having all those lessons learned from Student Roost, building them into this opportunity with Livensa and this partnership, what was the outcome?
Yeah, it's a great question. I'll go back to the actual transaction itself, because I think that is also a great reflection of how we try to do things and some of the advantages that we have. The seed portfolio of what was Livensa, we acquired through a very, highly structured transaction that we were able to negotiate on a bilateral basis with an US-based counterpart, thanks to the fact that we're global and we had the right connections over there. We knew the sector because we had been in Roost, so we felt comfortable coming into it, and we were a safe counterpart in terms of executing that transaction. They were very comfortable in dealing with us on a bilateral basis. What the structure allowed us to do is, first of all, gradually grow the portfolio from 3 assets basically to what then became 22 after a number of years, and 9,000 beds, becoming one of the largest student housing owner-operators in Iberia. Secondly, what it allowed us to do is, while we were getting delivered some of these assets and we knew we were going to achieve enough scale, we had the time to create the operating platform associated to those assets. The reality is the operating capabilities of student housing in Spain were almost non-existent at the time. So we really felt like we had to build our own operating platform. What does that mean? That means growing from 20 employees to almost 200 full-time employees. It means setting up the right processes. It means implementing the best practices, setting up the right IT infrastructure, etc. And all of those things we really were only capable of doing because we had had previous experiences in other geographies that allowed us to know what the best practices are. A great example of this is we actually brought in a Brookfield person as the CEO of Livensa Living, a colleague called CJ Slickland. Over these last couple of years, we were able to grow revenue per bed by around 45%. We were able to grow the portfolio up to the 22 assets, maximize margins, and therefore, ultimately, we're able to market this platform and find the right capital for it going forward. So very successful story.
Livensa was really a build fundamentally, and it's also a very human experience centric application. Going from 3 to 22, especially in Spain, are they all in the same place? Universities only exist where they exist. So how are we able to spread that knowledge around at different locations?
Yeah, absolutely. It's a portfolio of 22 assets across 11 cities, not just in Spain, actually, also in Portugal. But our presence is, I would say, diversified across the main student cities in both Spain and Portugal. So the good thing is about 50 to 60% are in tier 1 cities, so Madrid, Barcelona, Valencia, Lisbon, Porto. And then the remainder is in very, very powerful student markets where, again, we knew the dynamics because it's basically a replica of other markets at the end of the day, where there is lack of professional supply, there is huge demand, and there is that need for these students to actually find a place to live where they're going to be safe, they're going to have fun, they're going to have great experiences. Then, as you say, it's not just about the assets, but it's actually a very human experience that you need to provide these students because it's a critical time for them in their lives, and they will always remember where they actually stayed during their student years.
Yes, and speaking of the human experience, that's a good jumping off point, Ruben, for Aveo and thinking about, this is a population at a very different phase in their lives, but a very important and pivotal transition time typically. And my sense is that Aveo was a bit more of a contrarian investment at that time. Maybe it wasn't such an obvious or intuitive play. Can you give us a bit of a background about coming into that transaction at the time?
Yeah, I guess Alberto had the benefit of being able to grow a company and mold it as it was. Aveo was very much the opposite end of that spectrum, where we took a very broken and challenged business and used our operational expertise to turn it around. Aveo was a listed business on the Australian Stock Exchange. We ended up being able to purchase it at a 38% discount to its net tangible assets. It had traded down 60 to 70% over the prevailing year while we were looking at it. And the main reason for that was it had gone through the equivalent of a 60 minutes expose in terms of some of their practices, unfair contracts, transparency. The residential housing market in Australia had slowed down, which meant it put pressure on their sales. As a listed business, it had very typical short-term focuses on earnings instead of a more of a total return approach, meaning they had done things like not invested the capex in the assets. They were doing things like bringing on short-term developments and realizing profits at a time when the product was completed as opposed to when the product was sale. And management was very much not focused. They'd gone into 4 or 5 different business lines, including offshore expansion, residential development, things that were not directly relevant to their core business. So with all of that, why was it interesting to us? And the answer was they had great real estate. They had 92 villages located in great infill metro locations that were on average 20 to 25 years old, which meant the urban sprawl and the ability to replicate that portfolio was basically impossible. So if you took away the noise around what was going on and just thought about the core real estate, it was something we knew with our operational expertise we would be able to unlock.
So, Ruben, I remember you telling me this happened right before what ended up becoming the COVID pandemic. So I'm just curious, did that present an additional layer above and beyond our original plan that we didn't expect in taking on that business?
As you can imagine, with a resident cohort whose average age is 83, 84 years old in the middle of a pandemic, it certainly was probably a curveball we didn't expect. But that being said, I often get asked this question of how did COVID impact the business plan? And I think the reality is the business model itself proved quite resilient. We took a very resident first focus where we made sure that all our residents were safe, the security, the protocols to get in and the care that was available. We spent a lot more than we anticipated to make sure that resident experience was very good. But I guess where it actually impacted us was when we took over the business, we did have a CEO in mind. We were going to replace the management team. That was always part of the plan. But that CEO actually said, well, I can't abandon my post in the middle of the biggest crisis the company has ever faced. So it actually meant that us as Brookfield employees, similar to what Alberto mentioned, got injected into the company. And it really fast-tracked our business plan, how we thought about it. And we actually did end up re-underwriting the business plan as a virtue of the 9 months we spent with a lot of key executives in the business to really deal with that.
Ruben, it's been 6 years since the beginning of COVID, and ultimately that journey has felt longer to some than to others. But how did things ultimately turn out with Aveo?
We've just sold the business. It's the largest real estate transaction in Australia, so we're very happy with the outcome. But more importantly, the business and where we've left it, I sort of described it was a very challenged business, but during our hold period, we did 50 non-core disposals. That included both villages, but also non-core residential sites, aged care sites, etc. So we took the asset from 92 villages down to 65, really focused on the higher quality East Coast, larger scale assets. We spent $500 million worth of capex on the portfolio to really enhance the resident experience, make the assets better quality, which led to 10% per annum price growth year on year for the 5.5 years that we owned the business. Occupancy went from close to 80% to near full occupancy with extremely high resident NPS scores. So I think going through it, a lot of what the changes that were impacted really made the platform the standout platform to own in Australia. Really, the quality of the platform was the thing that attracted the most people, because I think when Brookfield goes into it, while economics and return are important, it is the governance we put in, the capex we spend, the technology that we put in to really make it an ongoing thing, which will allow it to then continue to scale and grow beyond that.
And Ruben, I would add to that, being two very different businesses in terms of where they come from and where they got to, I think the common lesson you can probably take from these both companies is that to the extent that you, during the journey, focus on just really improving the operating performance of the assets, and at the same time have the right platform around it that is in the right sector, has the right ecosystem, the right team members, that has capacity for growth. That's what generally makes a great business and what attracts then institutional capital to come into a more of a longer run play for them.
And that's a great point, Alberto. Full credit to our management team as well. But I think the ability to bring together a team that wants to work with a type of sponsor like a Brookfield, where they know they will get the opportunity to both work with us, but drive a plan, have the freedom to do it, have the capital to do it, and contribute to that business plan and growth as well. That's the key, right? At the end of the day, it's capital, it's people, it's being back to get on and do with it. And I think that's something that we're very lucky to do here at Brookfield.
Yeah, because to your point, I mean, these are in different regions. Two populations, both at transitions in their lives, but very different transitions. And ultimately, there's a lot of commonality here, as you say, Alberto, and what makes a really great long-term business. And ultimately, the kinds of priorities that humans have for where they live, where they call home, what is most important to them. I would love to know one of the most interesting random things you learned about, let's say, students and what they care about in their housing versus seniors and what they care about in their housing. What are the things that are most crucial and unique in their homes and living spaces that we might not think of?
I'd say two things. One more from the student perspective and the other one from our point of view and things that we learned throughout the process while operating this. I think one of the critical points for students was what we call the Student Life program. Again, you're not just providing a space for them where to live, the whole experience for them, creating new friends, meeting new people, doing new activities, and you are a vital part of that. You need to provoke a lot of those things happening. So a lot of the focus of the people that were in the residence was really creating that student life experience. very, very critical. And also what is great is it creates attachment to the asset, attachment to the brand. It helps with rebooking rates. We often said that our best advertisers were the students that were living in our residences. Second, and I think what is critical, probably Ruben will relate to this as well, for those guests, let's call them that way, it is very important to know they have a serious counterpart, a professional who is managing their asset, who is keeping the building in good status, who is putting the necessary capex, who's replacing the FF&E, who is working with them on the student life experience. So there is a price that needs to get paid for it, but the actual experience, safety, it is way better than just going to private rental where you don't know who you're actually dealing with and you have to set up your own utilities and your own gym and you don't really know anyone beyond who's living with you.
I can imagine that translates to a level of consideration and care for the space they call home that a smaller company or a smaller size landlord would be hard to deliver.
Well, that's exactly what I was going to hit on, which is at the end of the day, this is people's space or home or whatever it is. Alberto and I have the benefit of being able to invest across all asset classes. With living, you can clearly see that people care more about these things and they want people who care about these things as well. So as part of the process, we got invited to both sit down. We had all of our board meetings and we had the resident committees join us. And basically, a lot of the times, these are very well-educated people who have had really interesting life stories. And a lot of the times they just want to be heard. And the things that they have on their list to talk about are really important to them. And a lot of the time is just being heard. We had the Aveo Awards, which was for the employees and at the villages and at different parts and the type of people you meet. And they're very different to, say, the normal real estate or finance type of people. They're just wired differently. So I think understanding that and making sure that you're providing the support, you're giving people the chance to grow, because that is at the end of the day with increasingly operational businesses, you need to deliver on what your tenants or your customers want. And I think in living, it is as heightened as can be because often you are dealing with people who are students aren't always generally the main people to listen to, neither are elderly residents. So I think it is a big part of that, being heard, being able to integrate in the community and really making people feel that this is their home and they're not just renting or a small part of a community.
Not only listening to that feedback, but really acting on it ultimately creates the flywheel effect you're describing, which is the more satisfied and cared for and considered the population feels, the more likely they are to stay or to recommend it to the next.
Absolutely. And I think Alberto hit it, but our net promoter scores were terrible when we took over. And it was really just a disconnect of corporate management never came to the villages, but at the same time, they weren't empowering the village managers to do anything. So there was a big disconnect where simple things just weren't getting resolved because no one was sure who to talk to. And that just led to frustration. You fix some of these small things because you actually think about what's important and suddenly people are very happy and they're not major changes. They're often not that expensive, but it's just very logical as to what people care about.
Is there anything else that both of you uncovered in the course of these experiences that stuck with you, surprised you, that you remember really learning about that you didn't expect to through the course of the experience?
I think the old adage is the only thing inevitable in life is change. And I think going into Aveo, especially through COVID and the multiple times we underwrote and re-underwrote, I think the key takeaway for me was going into these more operationally intensive businesses, you've got to have flexibility. You've got to have teams that can think about things differently and evolve as situations, circumstances, things change. And you've got to have enough levers in your underwrites that you know that you can adapt and you can pivot if you need to. You just can't be fixated on this is the only way to do things and not pivot if things change. And I wouldn't say that surprised me, but I think the reality of how that played out in this underwrite was pretty clear to me.
I think Ruben touched on a very, very critical point, which is teamwork at the end of the day. It's only through that you're able to get the right people to deliver the right customer experience, which is, as you were pointing out, Meredith, is what's going to direct you well to then have the right financial performance. Because ultimately, we can never lose sight of the actual objective of these companies, which is being very, very profitable. But the only real way to drive revenue, to have pricing power in these kind of businesses is to provide the right experience and also keeping an eye always on the cost efficiency. Oftentimes, you can make better pricing decisions, achieve better margins by providing the right experience, not spending in things that are not going anywhere, but actually on the items that are going to make a real difference.
I learned a ton today, and now I know who to come to when I have questions about housing. Thank you both for your time today. It was great to talk to you.
Thanks, Meredith. Really appreciate it. Thanks, Alberto.
Thank you so much.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.